following presentation is exactly what I wish I knew when I first learned about Bitcoin, how I could have made significantly more amounts of money, and what is effectively going to be financial education. This is really to show what I've learned about the value of Bitcoin and assets in general. And I think that this will speak to a lot of people who are in a similar position as myself, who are thinking of themselves as more of traders, which I still do, to be fair. However, what I really want to shift now into is how to actually manage your finances and why Bitcoin is so valuable as an investment tool. So without further ado, let's get into it. And there are two major reasons. They all come back to this in its essence, and that is both inflation and opportunity cost. Now, here's the thing. With Bitcoin, there is, as everyone knows, a limited supply. There's 21 million. You can't print more. It's literally not possible programmatically. And there's all sorts of great features that make it an incredibly resilient inflation defending tool. And I think the best way to really show this is just with evidence, with price charts. And you can see here, this is when I really started to switch on to the value of Bitcoin and the value of, well, learning a financial education. Now, I entered the market somewhere around here. Maybe it was like early 2017, late 2016, something like this. I actually don't remember the exact time, to be honest. And I watched Bitcoin go from about $1,000 to $20,000, down to $3,000, back up to $14,000, back down to $5,000, and then back to the moon, new all-time highs at $60,000. And when I first jumped into the market, I'd always hear these things like everyone's going to wish they held Bitcoin. Bitcoin is the best thing to be holding. You should never sell your Bitcoin, yada, yada. These things I didn't understand at the time. And because I didn't understand it, I thought that it was bullshit. But because I didn't understand it, I didn't understand the massive opportunity that I was really missing here. And that opportunity is that Bitcoin is a high beta play for any asset that you could possibly hold that will protect you against inflation, which inflation is quite literally baked into all of our modern economies. I'm not saying it's even bad. I actually don't think that inflation is bad, especially with the way that we've actually set up, the way that the tax system is set up in the United States. It actually makes a lot of sense. You use your dollars as fiat currency to buy things, but you don't want to be holding dollars. You don't want to be holding your money in dollars because inflation is chipping away on it every day, every second. You're losing at best 2% a year. And, during some of the worst times, like we saw following the Rona dump, it went up, I believe, all the way to 8-9%. And, is that really real inflation to begin with? I mean, maybe it was more really like 20% in some scenarios. So this is something that I really wanted to focus on, because if I had understood this when I got into the markets right here, I would have multiplied my gains 10, 100, 1 billion fold, maybe. We shall see. Basically, the idea is that, hey, yes, you need dollars, or you need whatever fiat currency that you currently live in to actually live your life. However, you can use your savings to be in an asset like Bitcoin, or, you could also put it in the SPX as well, or gold. But as we'll go over a little bit later, I do think that Bitcoin just has the best potential and makes the most sense from a fundamental perspective. So that is when I really started to switch on to Bitcoin after the Rona dump, and when things started to pump again, because what happened then, the money printer went on like crazy and Bitcoin went up like crazy, way more than anything else. That was reasonably well known at the time. Of course, there were, shit coins and whatnot that went to the moon and beyond. But we're talking about more established things here, and things that also had staying power, which Bitcoin at that point already had about 10 years of history. Anyways, here's what I didn't understand. So the reason why holding assets over fiat is important is because inflation is killing your gains literally every day, every second, if held in literal dollars or whatever fiat currency that you live your life in. Money markets, which people typically go in to keep pace with inflation, really can only keep pace with inflation. They're not going to make you money. So there is opportunity cost there, which is what people generally do and what I was doing at the time. And assets don't just hold value, but can grow over time. An asset is, well, something like Bitcoin, a commodity, stocks, these sort of things. A house would be an asset as well. But again, the key here is that I had to really understand what the purpose of the tax code is and how it relates to assets. And it's all set up for people to put their money into assets. Traditionally, it's been stocks, really. Or I guess I should say in like the last 20, 30, maybe 40 years. However, With Bitcoin, you have, in my opinion, just a better, a better overall asset. Like I said, we'll get to that portion a little bit later. But here's the thing: you take out only just the amount that you need in dollars to live your life. Maybe for like a few months, whatever it ends up being, and keep the rest in whatever asset or basket of assets that you desire. Now, in my experience, one of the things that I heard this when I was younger. I don't know exactly when, but it really surprised me. And someone was telling me, who was like a high level banker or something like this, he was saying, yeah, in case you didn't know, or I'm sure it didn't start off like that, but he said something to the tune of most rich people, if not all rich people, keep actually very little cash in their bank accounts. They are mostly holding assets, whether it be real estate, again, commodities, or stocks, or, in some cases like fine art, yachts, cars, these sorts of collector's items. But they really only hold typically a very small portion of that amount in actual cash, usually having no more than, 6 months to a year of living expenses covered in a cash account. And I always thought, like, why the fuck would you do that? Like, don't you want the security of seeing like a humongous number in your bank account? It's like, yes, until you understand inflation. And as you can see here, we have an inflation calculator. And I just want to show the difference between 2017, which I think is where a lot of people on this channel really got into this space, versus 2025. And I'm using a constant price here just for ease of calculation at $10,000. So let's say you bought a car for $10,000 or the price was $10,000 in 2017. Well, if we fast forward to the year 2025, then that same car would no longer cost $10,000. In order to buy that car, you would need over 31% more dollars in order to make that purchase. That doesn't sound like a lot, but that does add up over time. Absolutely. And, just put a number on it. That would be, if you want to be super exact, it would be $13,114.60. Now, this is based off of the government supplied inflation data. Of course, like I said, there is disagreement with this, amongst economists. Some believe that it's much higher. And I think it probably is, because the CPI, which is what this one's based off of, is really only including a basket of goods, and it can be highly manipulated. It can be manipulated, and it certainly is advantageous for the progenitors of it to manipulate it during certain times. There's no doubt about that. So if you want more accurate reads, probably Trueflation, because you're also probably thinking, well, shit, man, like I wish it was that much because my fucking food costs 2x, from what it did even just a few years ago. You're probably right about that. In fact, you are right about that. I mean, anyways, moving on. I did an inflation calculator here, just going from year to year, just to show how different it gets over time and how we got to that $13,000 number. And in let me start off from the beginning. So just 1 year ago, 2024 would be this pane over here. There's been about 2.5% inflation. So, that's $250 if you were going with that net $10,000 purchase. Okay, not terrible. That's kind of what we generally accept. You barely notice it, which is kind of the point of inflation, but it is eroding your purchasing power, and that does compound year over year. Don't forget that fact as well. If we go to 2023, that number goes to 5.5. If we go to 2022, 9.8. If we go to 2021, that would be, hey, I left the number off there. What the fuck? Well, I can tell you, it is in the low teens, if memory serves me correctly. If we go to 2020, there was 24% difference, actually a little bit above. 2019, 25.70. If we go to 2018, that would be 28%. 2017, 31, 2016, 33.9, and 2015 all the way up to 35.60%. So, it just continues to go and go and go. You literally are losing money every day by holding it in US dollars. Again, I'm not saying you need to go all into Bitcoin. I'm not saying that you need to do anything at all. That's for you to decide. I'm not here to be your fucking dad or anything like that. I'm just sharing what I've learned, but I would have been much more better off if I had kept a significant amount of my net worth in Bitcoin, really, than doing what I did, which is just keeping it in a bank account for the most part. Anyways, moving on. Cash is not risk-free. So let's go over a financial term CAGR, C-A-G-R, compound annual growth rate, which refers to the average growth rate per year for an asset. And CAGR shows what is effectively the true long-term performance, ignoring short-term noise, and makes comparison between assets much easier. We're trying to figure out which asset is the faster horse, which one's the more resilient horse as well, by looking at year-over-year data. Now, your typical money market is going to have about historically, it's been about 20% CAGR over the past decade. Now, recently it has been more because interest rates have been going up. I think right now it's like 4.5% to 4%, somewhere around there. I think my Vanguard's making a little bit less than that, unfortunately. But all the more reason to put more money into hard assets. But like I said, you are losing purchasing power even by holding money in a money market, which is traditionally thought of as like, it's pretty much an inflation hedge, right? As you can see on the chart right here, you're getting a return, you are making some, but your real return is lower due to inflation. So when you account for inflation, you're actually making a small loss, probably, at least a little bit of a loss, something to be concerned with. Again, if capital preservation is your goal, which I think is logical for just about everyone. Anyways, let's compare the CAGR of some major investment vehicles. The typical ones are going to be your SPX, your NASDAQ, your golds, maybe a money market, but as we just went over, probably not the wisest decision. And I wanted to show a quick chart here that compares those four. And you can see Bitcoin over the past 5 years. So we're just looking at the past 5 years of data, has had pretty insane gains in terms of CAGR. It was over 62.30%. Now, I should say, I do expect Bitcoin's CAGR to go down over time. It's very unlikely to increase over time, but I do think that it will continue to go down, but in small amounts, and probably get somewhere close to what we see with the SPX and NASDAQ once it actually does reach its final form, maybe a little bit higher, who knows. But again, it has a lot of spread here. If you can see the next best one, which has been NASDAQ over the past 5 years, so the tech sector effectively, that has gained, or that has had a CAGR of 17.2%. So, we're talking about less than 30% of Bitcoins. The SPX, even worse. I'm trying to do some bad mental math, but I think that would be what, like 70% less, somewhere around there. And then gold, about the same, actually pretty much the exact same as SPX recently. Of course, gold has had a massive tailwind as an inflation hedge, as government printing has gotten to extreme levels as of recent. But before that, it was actually a terrible investment for over a decade. I think it was a long time before gold really did anything. And then of course your money market right here got it at 2.6%. That's for the last 5 years. So it has been going up again, just because in the past few years interest rates have also been going up. If you want it in nominal terms, you can look at the start of 2020. Bitcoin was 9,400, and when I recorded this data, it was June 13th. It was 106. I mean, that's insane gains. Again, these compounding gains really do add up fast for anyone with even a moderate amount of patience. On top of that, the SPX started at just over 3,000, now just under 6,000. Pretty good, pretty damn good. That's 14.5% CAGR, which effectively almost doubles you over the course of 5 years, but not nearly as good as Bitcoin. NASDAQ 100. 9 and 777s was a start for 15th of June in 2020. Now recently 21,631, again 17.2% CAGR. So very, very good. Those are not bad returns, but they're not as good as they could be. And I think that's due to, one, Bitcoin's immaturity as an asset is relatively new. A little under 20 years now of history, and two, it is just in all fundamental principles, it is a better asset for inflation purposes, for personal, holding purposes, for just about everything that I can really think of as to why anyone would even want to hold an asset to begin with. I mean, do you really want to hold SPX because well, I don't really know why you'd want to hold it other than the returns, to be honest. So there is that. Anyways, moving on. Let's just put another number on it. What if you invested $10,000 5 years ago in each one of these baskets? Well, Bitcoin, you'd have made $112,000. NASDAQ, about a fifth of that. SPX, less than a fifth of that. Gold, less than a fifth of that. Money market, less than a tenth of that, or about a tenth of that. Again, it's just because it is newer and because people are now starting to wake up to it, it has a lot more potential. If you were to compare the market caps, it's not even in the same universe. I mean, before we go on, even Bitcoin versus gold, the market caps there are Bitcoin's about 1/10 of gold. Gold's somewhere around 20 trillion, and gold is around 20 trillion, somewhere give or take. Bitcoin is around 2 trillion, give or take. So it's about a tenth of that. So it has significant amounts of potential. And I would imagine, Bitcoin at least gets to gold at some point. How soon does that happen? I have no fucking clue. It could also happen with gold actually coming down significantly. Maybe they find like a new asteroid with gold all over it, and then you have infinite amounts of gold and it's no longer very scarce. Anyways, moving on. Again, just showing it in chart format. Bitcoin doing its thing, as you can see. This is really fucking impressive in my opinion. Like really, really impressive. Just insane. It's just hard. Like you can't even see the lines for anything that's not the lump sum Bitcoin dollar value, or even the cost average Bitcoin dollar value. Everything else is flat compared to these, because these are where the value is being generated. That's truly where it is. All right. Bitcoin, wait, did I go over everything here? Yes. Oh, sorry. Let me explain this chart a little bit better. So in this chart, I ran a simulation as to what you would have received or what you would have generated if you would have invested $1,000 per week into Bitcoin for the past 10 years. And the numbers are, I can't even see how many zeros there are here. 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's 240 million as of current. Again, that's just investing $1,000 every week. That's, your dumbest DCA strategy, which, it works when you have an upwards asset, of course. So, find another fucking asset that can do something like that over that time spread. It's going to be very, very difficult. Anyways, Bitcoin is superior outside of its returns. Of course, these are the sort of fundamental reasons why I just think it makes more sense. Liquidity, you have a 24/7 market. That means you can trade, you can get dollars for your Bitcoins at any moment that you need. You can transfer Bitcoin at any moment that you need. Compare that with traditional finance banking. Like you don't have the weekends, obviously. You don't have holidays. There's bank holidays. And then you're also tethered to the US markets, right? If you're investing in US markets, you only got 6.5 hours, 5 days a week. Minus, of course, those holidays. Well, one of which you just had, actually. Anyways, it's a global market, so theoretically you have more liquidity. Now, if you compare this obviously to SPX and NASDAQ, right now they do have more liquidity than Bitcoin. But my point here is that Bitcoin has plenty of liquidity for really probably anyone watching this video. Now, if you're a micro sailor, you're probably not watching this video, or if you are, what's up, man? It would be a pleasure to talk with you. However, that's not going to be as important. And then there's just no down days for Bitcoin. Like you can send your Bitcoin whenever you want. 10 minutes. You don't have to wait fucking 2 days for settlement, or even 1 day for settlement. Even that feels so antiquated when you've used Bitcoin for even just one transaction. You're like, holy shit, I just sent it. It's Sunday at 2 p.m. and it's gone. Like it's gone. It's done its duty. Then of course we have sovereignty. You have self-custody. That's just a humongous advantage. Now it does come with its drawbacks as well. But in terms of its advantage, like, why do people want to use banks? People want to use banks because they want their money to feel safe. They want their money to feel safe because they feel like when it's in a bank, it's one, being protected by someone else, and two, they also feel like it's really not losing value. But in terms of self-custody, there used to be this sort of kind of like joke idea, but although it definitely did happen, that, people with a shit ton of money would, bury it in their backyards or, hide it somewhere, right? And that certainly did happen. But the point of this was to keep your money close to you so that, it's fucking safe with you, because banks do have problems. Banks introduce another layer of risk, right? Now, it doesn't happen often. And for, most people, especially in the US or the Western world, this is not really really concern, at least for the big banks. But, it does add another layer of risk that they might fail. We've seen many banks fail over the years. Of course, banks have, legitimate fundamental issues because they are prone to bank runs. I mean, banks quite literally are not required to keep the amount of your money in that account. Like, you think when you have a bank and you send it to the bank, it's like sitting in a vault somewhere and it's safe and it's all good. No, it's just a number on a data ledger, floating around in the sky, just like Bitcoin, to be fair. But because it is tethered to the bank system, someone could theoretically have to hack the bank, and that is more and more of a concern nowadays as financial crimes, become a legitimate issue, right? I mean, we've seen that many times, state-sponsored sort of things. In fact, as I've lived in Finland, there's been serious concerns and a lot of warnings from my bank and also the government that Russia will try to do a cyber attack on our banks and have some cash, basically, is what they were saying. Kind of a big wake up call right there. So of course, with Bitcoin, you can hold it on, on a ledger in your pocket. You can hold it in a brain wallet. You don't even need to fucking hold a physical device. Obviously, that reduces custodian risk, but then you introduce a new risk. You have personal risk. My biggest issue with Bitcoin is that if you have a fucking ledger on you, then someone can just come to your house and be like, hey, I have a gun, you have a ledger, how about you give me that fucking ledger or you get the gun? And I don't mean I'm going to hand it over to you, if you catch my drift. That is a legitimate concern, of course. Now, there are ways to defend against this. You can do multi-sig type of stuff where you spread out, your seeds, and it's like, look, you can torture me all you want, brother, but I literally can't even give it to you, even if I wanted. Sorry. Or you even you actually even can have banks custody it now too, which maybe that destroys the point, maybe it doesn't, but anyways, of course, as we just went over, no bank holidays, no day +2 or off hours, any of this bullshit. You can always do whatever the hell you want with it, whenever you want with it, assuming that you have access to your funds in the form of your device or your brain wallet, whatever the hell it might be. You're not tied to that 6 hours of traditional market trading. So if you need liquidity from your holdings in SPX or NASDAQ or gold, even for that matter, for example, you have to be able to sell in order to get US dollars or whatever fiat currency you are using. And you can't sell if the market ain't trading. You need someone else to trade with. And that only happens 6.5 hours a day, 5 days a week. It's not very much. It's literally less than that's less than like 30% of the week. Not great odds. Like, what if something really does happen? You really do need that liquidity like now, and you can't wait for the next trading day plus another 2, maybe 3 days. Maybe it's a weekend, so it ends up being like 4 or 5 days before you actually settle that. And then, of course, if you, let's say, are in a jurisdiction that starts to create some laws that you just don't like, whether it be laws against you, whether it be laws against your coins, whether it be laws against just anything really that is unfavorable as you determine it, well, you don't have the same risk as you would have if you were holding all of your money in a bank account or in that country's, stock market, for example, or real estate. You can't just move that easily. With Bitcoins, especially if you have a brain wallet or even a physical wallet, you just put it on your person. You go wherever the hell you want, and you say sayonara to that old place. I mean, it's done. So it's weightless, it's invisible, it's stealth. It's like acid. It's like LSD. You can't smell it, you can't taste it, you can't see it. Doesn't exist. Anyways, moving on. Yes, and also I want to now go over a little bit of the risk versus stablecoins, for example. So you have counterparty and censorship risk. So, the point that I'm trying to make here is that, naturally some people might say, well, yeah, okay, maybe cryptos make more sense, but I don't really want to be holding Bitcoin. I'd rather hold a stablecoin. Stablecoins are, I can have a lot of those same features with, access to liquidity and self-custody and all these sort of things with stablecoins. I don't really want to fuck around with Bitcoin or any of these other things. Fair enough, but do understand that stablecoins come with their own issues. We have seen peg failures in the past, although typically they do snap back relatively fast, especially for the major stablecoin issuers like Tether and Circle. But we saw UST, we saw USDC in 2023, constant Tether FUD, like ever since I entered this market. In fact, this is the last couple of years are the only time that I haven't heard Tether truthers come around. But it was a big thing in 2017. 2017, Tether's collapsing, Tether is faking it all, blah, 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 blah. Nothing ever came out of it. And sometimes it did lose its peg and it did move the market, but nothing ever happens. Nothing ever happens. Knock on wood. Hopefully nothing ever does happen. But 10 years plus of proof. I mean, you got to put your risk somewhere, and I guess for me that would be fine. Anyways. Fiat, of course, you have withdrawal limits. Like I tried to do this recently, actually, because I needed to pay for a service that was, a little bit more, and I couldn't actually pay for it, even though I had plenty of money in my account. I couldn't pay for the service because it was above a certain threshold that my bank felt comfortable with. Again, listen to those words. My bank didn't feel comfortable with the amount that I wanted to transfer. So they just, they inherently put a limit on it. Why? Again, it's because of that fractional reserve. They don't need to hold your full amount of dollars or whatever in your bank account. They just need to hold, I think it's like less than 10% or something. It's very, very low. So for them, they want to make double sure that if you're sending money outside of the bank, that it's legit. Otherwise, they actually have real losses, right? Of course, your bank account, your fiat can be frozen. It can be frozen. Also, stablecoins, I think, can freeze you as well, to be fair. Time restraints, of course, significant downtime, as we went over, during holidays, non-market hours, non-weekdays as well. And then the speed, best case scenario to receive a transfer is maybe later that day. That actually do have some services that, that can get that done, but it's very limited in scope. For the most part, you're going to be waiting at least a day, maybe 2 days or 3 days. And again, if you initiate that transfer on a Friday, for example, you're going to be waiting until at least Monday, for that to come up, maybe even Tuesday, depending upon how it is. So yes, anyways, likely to take a long time is my point. And then you have the costs. It costs more. If you want to send millions of dollars of Bitcoin, you're not going to spend more than, it depends, but you're not going to spend more than $100 to transfer that. Whereas if you want to transfer $100,000 or $1 million worth of USD, I mean, that's going to be tremendous amounts. They're probably going to charge you like 1%, somewhere around there, maybe less, depending upon who's sending it. But that's not unheard of at all. Maybe in some cases even on the lower end. Anyways, moving on, and I'm gonna take a sip of this water here while you read this chart, marinate on these thoughts. Okay, so why does Bitcoin matter beyond price? So now let's go into some more fundamental things for Bitcoin. Why is it effectively, the perfect asset? Or as people, the new meme is that Bitcoin is pristine collateral, which I think this is honestly the best meme for Bitcoin is pristine collateral, plus you can use that to get loans, Bitcoin-backed loans. I think this is honestly the killer use case for Bitcoin, but I'll get into that into another video. Anyways, why does Bitcoin matter beyond price? So first, as everyone knows, there's a hard cap supply. There's 21 million forever. Can't change it. Yes, they might change the decimal places and whatnot, but at the end of the day, there's only 21 million. It's not like gold or stocks, which can issue more stocks. Gold, you can find more gold. Oil, you can find more oil. All of these sorts of things. There is no hard cap, obviously. The monetary policy is code locked, so no silent money printing, no nothing like this. Scarcity fuels the upside, of course, and you have a hedge against inflation and just fiat, running away like crazy. Of course, there is also final settlement bearer. It's a final settlement bearer asset, meaning that. Sorry, I missed the point above that. 24/7, 365 global liquidity. Markets never close. We already went over this several times. Final settlement bearer asset. So that means self-custody equals zero counterparty risk. Again, you don't have the bank holding your money risk. Maybe the bank gets a bank run, maybe the bank fails for whatever reason, who knows? But you don't have that risk. You do have other risks, like I said. You can also avoid, the FTX scenario where you're holding it on Coinbase or FTX or whatever exchange and they go under, they have their issues, they get hacked, whatever it might be. You don't have that issue if you just self-custody. Portability and divisibility. You can move 100 million on a USB or pay 0.001 Bitcoin, same rails. It's all good. It's gonna be fine. Most capital efficient collateral on earth, effectively. Censorship resistant rails. So no authority can freeze your Bitcoins without your keys or anything like this. You have freedom from bank and capital controls, basically. So if the government does want to clamp down, they can't actually clamp down on your coins. They can clamp down on other offshoots, of course, but as far as the coins go, if you want to send your money somewhere, you can do that. There is nothing stopping you. There's nothing stopping you. Programmatic transparency, issuance, hash rates, fees live on chain, and they are like, you can verify them. You can't fake that data. The on-chain data, I mean, I don't know if it's necessarily a quant edge, but it can be useful to get a general insight. I mean, do you have these sort of same tools for your bank account or for your stock holdings? Absolutely not. Absolutely not. And for a neurotic, anxious person, perhaps like myself, makes me feel better, at least a little bit. Programmatic, oh wait, no, we just went over that. Low long-term correlation, multi-year Bitcoin equity correlation, not 0.2 to not 0.3. That's if you look at all equities. Obviously, Bitcoin does still have a pretty strong correlation with the tech sector, especially. But Bitcoin, does have decoupling potential, in my opinion. It's definitely not a done deal or a given, but it has potential, and theoretically it makes a lot of sense. But as of this stage, in its still growing development, I think it's still going to be tethered mostly to the tech sector as it has been. No storage or carry cost. Your cold storage is maybe like $100 to $150. I mean, pretty much nothing after that. Again, you can skip those 1% fund fees that erode your CAGR. When you do invest in some sort of an ETF, you're paying some sort of expense cost or expense ratio for that. That's going to eat into your gains. Bitcoin, you just don't have that. Not an issue there. Evolving collateral markets. So as of 2025, you can start to get 30 to 50% loan to value loans. Bitcoin only backed, no credit check or anything like this, which is pretty fucking crazy. I haven't done it myself, but I've been looking a lot into it, and it makes a lot of sense. And I think that's honestly the next best use case for the coins, to be quite frank with you. And the reason why that is because you can basically get dollar liquidity without a taxable sale. So it's kind of it'd be similar to selling your Bitcoin, except you don't have to sell your Bitcoin, so you don't incur a tax event, but you still get the dollars, and then you just pay the loan sort of premium. But that's, again, a topic for another video. It's something I've been really looking into a lot recently because I think that honestly changes everything. I really think that that's going to be the killer use case for Bitcoin. Collateral for something like that, I mean, that's exactly what you want pristine collateral for. Open sourced optionality. So upgrades, land, permissionless, like Taproot, Lightning, these sort of things. Call option on future rails and tokenization effectively. And then you got your cultural brand and network effects. Bitcoin is like the Kleenex of crypto. Institutions start here. They're not starting off with fucking Fartcoin. Maybe they are. I mean, probably not though. And of course, it has the deepest liquidity, tightest spreads for larger trades. Most history as well, with good history, I should say. And again, a little bit of caveats here. Of course, there's volatility. Absolutely. Secure your fucking keys. And yes, there will be regulatory changes, I'm sure, as different, government people come in, especially to the US. Anyways, let's speak a little bit more about tactical integrations for traders. This is kind of where I started out because, I wasn't comfortable just going all into Bitcoin. So I totally understand, if you're new to this just doesn't fucking compute. But instead of keeping profits in USD, I could certainly say you're going to be better off rolling them into equities, maybe even money markets. And I would consider at least putting some into Bitcoin. You can start small first, get your feet wet, 30% into Bitcoin, for example, another 30% into SPX. These are the two big ones, or the NDX, mostly the same, to be honest. 20% in gold, maybe another 10% in money markets. Spread it out a little bit. Watch how it grows over a couple of years, and you'll see very, very quickly why some of these are much more favorable to others. And the answer will be obvious, especially over a long period of time. I truly believe that. So key takeaways here as we end our presentation. Maybe went a little bit longer than what I expected, to be honest, but inflation kills your cash. It kills your purchasing power. Money markets barely break even when adjusted for inflation. And Bitcoin has crushed every traditional market macro asset in the past decade, really in the past almost 2 decades now. But I think those really, really early years are not fair to measure it against just because the gains were so absolutely astronomical. You're not going to get that again. The real risk, in my opinion, is not owning any. At least have some. Again, it is hard capped. So, every little bit that you get, at this point, naturally, if you look 10, 20, 30 years down the road, it's probably going to be worth more. Park profits into Bitcoin, compound in hard money, and let it work faster for you than other assets. That's really the crux of it. Look, you put your money into Bitcoin, you keep some for expenses, whatever makes sense for you. Maybe it's all the way out to a year, maybe it's just a month, whatever it is. I don't know what's right for you. You have have to make that decision for yourself. But I would strongly suggest to do something that I've done, or I can just relate what I have done, which is everything else into assets. I'm actually not all into Bitcoin, by the way. In fact, not even close, but into other assets. And that is the way that you can let your money actually work for you. You don't just beat inflation. If you pick the right assets, you actually will massively outpace and benefit from inflation. So you're not so, pissed off during a 2020 like event when COVID happens and prices go up because inflation is rising like crazy. But you also know that that means that your assets are rising even more. Thus, you're actually making money because of that, rather than, breaking even or obviously losing as well. And that's where we're going to end our presentation. Again, this is really everything that I wish I knew when I first got into Bitcoin. This would have helped me understand the true value of it. Yes, there are many people who were speaking about this. The Bitcoiners were absolutely right about many things, and I'm sure they'll be right about many more things. I'm wrong about some things as well, but certainly more right on the most important things in my experience. And I wish I would have listened early on in my career, because again, that would have netted me significantly higher net worth. And at the end of the day, more Bitcoin in my opinion is probably better. So we'll end on that note. As always, I wish you the best of the best. This is one of the few videos where I'll say, hey, consider liking and subscribing. I'm planning on doing similar sort of content to this in the future. Maybe even consider sharing it with someone else who is, in the same sort of boat as you, especially the people coming from sort of a trader background. And we'll end things right there. Take care and see you soon.